webinar. So sorry about that, everyone. So back to what I was talking about, we had this sort of over allocation to short volatility. Everybody did it, and I think the assets in those products actually rose by about 40 to 50%. Okay, I'm getting a little echo, so I'll turn that off on the YouTube side of things. Can you guys still hear me?
Yep, you're good.
Okay, so hopefully it's coming through on YouTube because I had to mute the YouTube stream because I was getting an echo. I just had to mute the volume on it, but it's still running. Okay, so everybody was in. Assets in those products went up about 40, 50% in January. And that was the death knell for those products, everybody in. And what happened was we had a good old-fashioned volatility squeeze. So of course, VIX is related to underlying volatility in markets. So the two are connected. The VIX should reflect movement, at least to some extent, in the S&P 500. It is insurance in a sense on the S&P 500. But when volatility as an asset class starts to develop its own kind of personality in a sense, and volatility as an asset class has gotten bigger and bigger and bigger over time, when that happens, then the two can dislocate. There can be a dislocation. And that's what we saw back then. We saw the VIX double in one day. And we're seeing the VIX, last I checked, was up to about 56, 57. And that actually breaks the record from 2018. We had the VIX up 120% back then, and we've actually surpassed that. So we're seeing a similar dislocation. So the VIX is dislocating from the S&P, even though the S&P is down a lot. I'm not understating the severity of the sell-off here, but we have something that leads us to believe that something else is going on out there, and we don't know exactly what it is. Is it the yen carry? Probably. There's some reports that this could be $5 to $20 trillion in terms of the carry. Now, Japan raising by a little bit, does that mean? I mean, it's still a good trade, but the problem is it's affecting the plumbing somewhere. Something could be affecting the underlying plumbing in the financial side of things. And so when everybody's kind of in on one side of the boat again, where we saw realized vol of nothing and markets just going up and over concentration in a few names, all these things that we've been complaining about in a sense, or, perhaps benefiting from, if you're just, if you're invested in index funds, you've been doing fine, right? Because you're benefiting from that over concentration. But, market watchers and technicians are going, well, this isn't healthy. This isn't healthy. 20-year highs in concentration, can't be healthy, but yet we kept going. And so what's happening is something's finally snapped. Something's finally broken. Now, the good news is, I think from an economic standpoint, I don't think things are particularly bad at all. Still some great, I was just looking at, and keep in mind that anything we talk about, from an economic standpoint, doesn't really matter on a day like this, right? We're just dealing with a dislocation. We're dealing with panic. We're dealing with hedge funds getting blown up. We're dealing with a lot of things that are going to deviate from some sort of economic reality. But what we can do in order to bolster our confidence, and that's certainly something we need on a day like this, is that things are still looking really great. Things are looking, and of course that can change. Look, things can change, and sometimes they do change rather quickly at the end of a very positive cycle. So, I'm not saying things won't necessarily change quickly, but from an economic standpoint, we have to understand that things are still very, very positive. If you look at a lot of the data out there, where's my little chart here? Let's take a look at our VIX term structure here. Very, very negative, right? So we've pushed up We've got the VIX around 55. We've got VIX futures. So this is your front future, second future, third future, fourth future. Typically, in a healthy market, you're going to see this in a contango, which is basically low and then going higher and higher and higher because over time people worry about what might happen. But in the short term, they're not worried. So we have that upward sloping curve. Today, as you can see, and one sign on Friday was that we started to backwardate. And what that means is that the front future is above the second future. And so this can actually get even more extreme. If you look at a 2008, 2020 kind of situation, this is definitely ugly. It's telling you this could be a little bit durable. So I think one thing we have to keep in mind is that this could be durable. You guys can't see my VIX futures here. There we go. Sorry about that. Okay. So what this means is that this curve, which I was just describing, is normally in a contango. Right now, we're backward. So we've got the front futures, and it's quite rare actually to see so many futures backward. So the front is higher than the second, which is higher than the third, fourth, fifth. Even with the election, typically you get that sort of kink up here in the election. Even that is giving way today. So there's really an extremely high amount of fear. Now, can it get worse? Yeah, that front future can get even more steep. So there's room for a little bit more panic, which worries me a little bit. Now, if we look at, so we can see right here, we've got, we'll look at that in a moment. We've got gamma flows. You can't really see the numbers in here, but we're kind of down around here, which is between 5,100, 5,200. We actually have positive gamma. Let's go back up here. 51 to 5,200, we have positive gamma, dealer gamma. Now, these positions are going to be changing throughout the day, right? People are going to be rejigging their books, and this is going to, cause some movement in itself as people kind of neutralize risk, and people who are short gamma need to sell, but people who are long gamma need to buy. So there's a little bit of back and forth in terms of what is supportive and what is not supportive. But we did get into this negative gamma area. So this is the concern right now. If markets open up down here, what we're getting is more negative gamma. And what that means is dealers are offside. So that effectively means, and you've got CTA selling as well. So CTAs are a big part of it, right? And down around these levels, you have, let me give you an example of volatility targeting funds. What do? They push things up when things are calm, and they do the opposite when things are not calm. So when volatility is low, they allocate to equity markets. And that's just a positive loop, isn't it? Because buying markets lowers volatility even more, which tells them volatility is low, so let's buy some more markets, right? So it's kind of this sort of reinforcing action. But what can happen is that it can go the other way. When volatility starts rising, then they need to sell, and then so on and so forth. And so that's why volatility can cluster. Volatility can be very, very low for long periods of time. But then when all heck breaks loose, it can be more durable. And this is getting to the point where it's probably a little bit durable. And we don't know what, I mean, maybe, who knows? If this truly is about some financial plumbing being affected and a contagion of sorts, then if central banks react to that, maybe an emergency cut, I don't know. I don't think central banks care that stocks are down 10% or 12% or 13%. What they do care about is if something's breaking and they need to offer support. So this is the question that we can't answer right now. We know something's breaking because the VIX doesn't, there's enough evidence that somebody's blowing up out there, somebody's panicking. There's some severe pain happening because you don't get moves like this on the VIX unless that's happening. Um, so the question is, what happens? Does somebody come out? I think we had a Fed individual come out this morning and say, "Don't worry, if something's wrong, we're here to fix it." I don't think that's offering much solace to the market right now. Let me take a quick look. Yeah, maybe a little. I mean, Nasdaq's down 5% now. It was down 6% at one point. Not a big deal, 1% at this point. I mean, this thing could be moving 50 basis points a tick, when we open. I mean, things are going to be all over the place. It's going to be pandemonium. But I think what has happened, look, we had the jobs number. That was impactful because, and I was in this boat. I thought, you know what, we probably are going to get a falling rate environment, but for the right reasons. If rates are too high and real rates are high, meaning risk-free is too high above where inflation is, then there's room for the Fed to move in there. And so if they start to lower rates because of inflation, typically lowering rates isn't very good for markets. It just isn't. Markets tend to rally into, now I don't know about election years, but markets tend to rally into the rate cut. And then when rate cuts are happening, markets don't like that because they're usually falling because the economy is having trouble. But if we are truly, and I think this is still in place, and why I'm not worried too much. I mean, there's certainly something to worry about from a things breaking standpoint, and things can go anywhere. But from an investor standpoint, I'm not that worried at this point. Things are breaking. This could be a chance to add to portfolios if you've got cash sitting around for your kids, things like that. But if rates are coming down because rates are simply too high versus inflation and the economy is generally okay, which all the data is basically showing. We had a great GDP number recently. I mean, you can always pick apart these numbers, but there's a lot of positive stuff going on. We see travel numbers are still fantastic. Restaurant numbers are still fantastic. Um, you know, uh, sure, unemployment's gone up a little bit, and we have something going on there. But things are still very, very positive, broadly speaking. So the question is, in a rate cut environment where cuts are happening because rates are simply too high versus inflation and the economy is okay, then we can have kind of a healthy market where a roaring 20s type scenario where everything will do okay. But if things are truly breaking in the economy, and if this is the beginning of things getting quite a bit worse, then we may have a bit of a problem there. And so I think that jobs number kind of helped to trigger something. It's only one number. It can't trigger something like this. Um, Now, down here below 5,100, we start to have negative gamma again. So this is where the market, if it gets down there, can get a little bit, can gather momentum a little bit to the downside, 50-50, 50-75. And it's quite possible that the circuit breakers might have to put a stop to this. That might be the moment that, if it's a sort of self-fulfilling thing where things just have to get as ugly as they can get, then maybe we get to the circuits, um, which are maybe around 5,000 if I remember correctly on the S&P. Which brings us back to, let's take a quick look here. Let's take a quick look here. big cap is really getting slammed today. Um, Apple didn't help, right? Warren Buffett's not helping us today. I think Apple was down over 20 bucks, 10% at one point. Um, so, not good timing, right? And so it's that classic when it rains, it pours kind of situation, right? When things are going up, it was kind of all sort of everything kind of pointing in the right direction. And then funny how it works when, uh, you know, things go the other way and all the planets align in the wrong way. So we've got sort of 5,000, let's say 500 on the SPY, which is kind of around that April low. That's, I mean, when you think about it, we weren't that very far off the highs on Friday and certainly Thursday, Wednesday. I mean, that was not really a sell-off uh, to be too concerned about. Now we're starting to get a little bit concerned, but in the grand scheme of things, the question is this going to reverse any kind of wealth effect? And I think what keeps things going is people feel wealthy from their homes. Of course, there's 50% of the population that just is struggling. Not to play that, but a lot of what matters is where the wealth can spend money, and so that's going to be people who feel wealthy from equity and homes and from the stock market and things like that. So there's no question that this is going to have some sort of effect. And bonds are certainly taking care of a little bit of the problem for the Fed here. So I think we've got TLT up around 100. It's not, I don't think it's much higher at this point. Let's take a look at the 10-year. This is as of, we don't have updates here. This morning, let's take a look. That's 5%. Where's the 10-year? I think it was down around 368. Was it around 368? Yeah. I don't know. Is this actually, yeah, this is actually real time, I think. Anybody have a 10-year?
3.678.
3.678. Okay. So a little, okay. So this is updating. Oh, no, maybe not. I just saw the change, 3.678. So yeah, okay. So we've got the 10-year yield popping again. What a move in just a few days. I mean, really unbelievable volatility in fixed income, which of course spreads to equities, which of course spreads, right? So you can see how these things all kind of go in the same direction um, to create a little bit of instability out there. But if we're looking at 50 basis points in September, maybe another 50 basis points at the end of the year, I don't think Powell's going to care about this political idea. He can't do anything drastic because he doesn't want it to look a certain way. I mean, he's got to do what he's got to do for the economy. I don't think things are looking particularly bad, but he may have to address the animal spirits that are angry right now. So we'll have to see how he reacts. I think we'll probably have a little bit. It's a quiet week, I think, overall for data. We do have some important stuff on Thursday. I think we've got that jobs number. See if we have some support there for what we saw last week. Now, couple times when we've had these really, really, really big 3-week VIX spikes. And so this is actually old now. So this is going to be up into here. It's going to be up into here right now. And so is it durable? Well, you've got 1-year numbers for the S&P 500 that are generally really, really good after that. So yes, there's going to be a lot of panic. But the fact is that going forward, things look pretty good. You've got 2021, which was right, that was December of 2021, one of the outliers here where you did have markets suffer, and that was 2022, which was a horrible year. We closed the year terribly. Um, Big caps got slammed, everything got slammed. It was that ugly, ugly year where even safety trades didn't work out, right? Nothing worked out. Remember bonds? They were just, I mean, it was just a complete decimation. So here's your outlier. The question is, do we get safety? Bitcoin getting destroyed this morning. So Bitcoin as a safe haven, not really working out right now. Not really working out. Sorry if anyone loves Bitcoin, but to me, it just it's beta, right? It's just beta. It's risk on. Maybe that changes over time. They're going to have to spend. Trump's going to spend. Kamala's going to spend. I kind of like it. I don't totally get it, and it's silly, but I think why not? Why not? I'm not close to the idea that something like that can go to 100 grand. But for now, we're not getting too much of a hedge out of it. Let's take a look at gold here. Yeah, we've got gold getting hit. So this is not atypical, guys, because usually in a liquidity event, you do get that. We saw that in 2020. They slammed gold initially. I remember it was ugly, just like everything else was ugly. People were selling, they were liquidating wherever they could. They're going to liquidate Apple. They would have liquidated Apple anyway. Without Buffett, they would have been looking to Apple to raise some money. So, that was a bit of concern on Thursday, Friday. We kind of saw initially on Friday morning, we saw some reaction out of kind of defensive areas and some of those hedge trades. And that unwound, and that was definitely a bit of a concern. When people start to sell everything, you know that something is going on, something more insidious is happening, and maybe something durable, because it smells of liquidation, right? They're just kind of selling everything they can. They don't care. It's baby out with the bathwater kind of situation. And so we did see a little bit of that on Friday. Which was concerning. I mean, I don't think anyone could have foreseen what happened this morning. I mean, it is a Black Monday type event, and that's what happened. I mean, you almost look at every crash, 87, and that you go through all the big crashes. We kind of had Thursday, Friday, not great, and then Monday, total panic. And so, if we kind of follow that playbook, turn on Tuesday. Today we've got some serious damage. So I'm not betting that this unwinds quickly. Now, if we can get up into the 52, 50 range, we could get a little bit of acceleration to the upside. It could be a little bit of acceleration. It depends. I'm just not sure how the zero DTE stuff is going to play. That plays a big part of the zero datal expiry world, which is, of course, 50 to 60% of all options traded these days, at least on the index side. So it's huge. It's a huge influence throughout the day. Now, I don't know if a lot of that can spill over into the next day. It's generally closing out at the end of each day. But during the day, there's quite a bit of impact, certainly from those flows. Now we'll have to see how that plays out. So if you've got, you kind of have these secondary Greeks, and it's starting to get a little bit too far into it, for most people. But you've got things like, charm, which is, as time passes, so a zero DTE, as we know, delta can be 0 or 100 on expiry. So if it's an out of the money call, the delta goes to 0. If it's in the money, it goes to 100. So if we get to a point where the market rallies to maybe 5,200, 5,250, and kind of sits around big positions at the 52 level. If we could push just above that, then maybe charm starts having an effect and dealers have to actually start buying stock, um, because those options become closer to 100 delta. But again, that's getting a little bit deeper into the weeds. And of course, at this point, um, anything can happen. Uh, at this point, let's take a look at let's take a look at VIX Central again. Still pretty similar structure out there to the VIX futures. Not really changing. So there's no relief. So even on that 1% NASDAQ rally, really not much relief out there. Um, yeah, from an opportunity standpoint, you got some unbelievable implied vols here. Unbelievable. So if you're lucky and you got some dry powder, maybe not a bad time to be stepping in, selling some puts at levels that you want to own the S&P at, 50, 4,900, 5,000, kind of around there. You can spread it out a little bit, sell like a bull vertical, bull put vertical, to kind of give yourself a little bit of that protection to the downside, well, that full protection beyond a certain point. So if things do get really ugly, at least you've got that protection there. But at this point, we're looking at, so here's your S&P down around 51.25, 51.50. It really feels like we've got to kind of get to that 200 day. Do we have to? No, but it feels like that could be the spot. You rarely have a gap like this and then just trade right up to here. So this could drift down a little bit more and max pain, right? Markets always find max pain for people. So we could come into here, but certainly 49.50 to 5,000 has got to be a logical place for us to maybe place some bets. In between there, I think there's just going to be a lot of damage control. People aren't exactly looking for opportunity. They're going to be looking to fix problems. And that could, push us around a little bit. So let's take a look at the Qs. We're down into 425. Does that sound about right? Nasdaq's rallied about 1.3% so far. Yeah, 425. So we're in here. This is your weekly QQQ. So that's, the Nasdaq has obviously fared a little worse as the concentration beta has unwound a little bit. So we've got our QQQs right down on that 50 weekly, EA. And so this could be a logical place from that standpoint. Some of my thoughts on Friday were that, look, the Nasdaq got slammed, but many of these mags are also seen as kind of places to hide. They have been in the past. They're not right now because they've obviously, they've broken here and they've come off these crazy highs that we set. I mean, that really was an insane rally. Microsoft went from 225 to 465. Okay, a lot of that was on AI. So there's this big question overhanging. And what I've been talking about, and many people, and Samantha and a few other people have been talking about, Ginza, is this idea of overspend, right? This whole, okay, AI was a cool idea. And I think there's almost this feeling that that companies have to spend, that they feel left out. It's like .com back in the day. My gosh, if I don't put .com on the end of my name, no one's going to notice me. So everyone's got to talk about AI, and everybody's got to, spend AI. They don't even know where they're spending it. They don't know what they're spending it for. And so there's this risk that there's this kind of this hoarding of chips and all this stuff going on where, the return on investment is very much up in question, up in the air. Like companies have said, like, we're just going to spend, spend, spend. You look at Microsoft, Copilot is a bit of meh at this point, right? And they're supposed to be the general, the monetization kings. Microsoft is supposed to be the ones who have already figured out how to make money. And sure, they have a little bit, but even they're saying, Copilot, I don't know. Is Chat GPT search going to take over for Google? No, it's not. But there's disruption happening, and there's the idea of disruption. So remember, the idea of disruption is oftentimes bigger than actual disruption. So the idea is what can really push markets. This excitement of what's happening, and everybody just spending like drunken sailors. Maybe that comes, I think Nvidia's number is going to be good because this, they're the picks and shovels maker, and maybe they have one last really good report, and then after that they kind of go, oh, okay, people have kind of, slowed down in spending on this stuff. And so last week I was kind of talking about how, maybe we get to the point where it's almost like, remember Facebook a few years ago, they were focusing so much on the metaverse and everyone was upset about it. Why are you focusing on this ridiculous metaverse? And that wasn't even like AI. Everyone loves AI now. But everyone was kind of saying, are you guys, maybe you should focus on your core business. Like, what's all this AI spend about? And then Zuck finally said, okay, all right. And he kind of admitted, he sort of said, well, look, okay, we're going to slow down on that. And that was Facebook at $95 and it went to 500. And so I almost wonder if there's this moment where some of these companies need to say, you know what, we've spent enough for now. Let's just see what happens. We've given you the messaging. We've mentioned AI 15 times on our calls, on our earnings calls. Great. Okay, we've given investors kind of what they want. We're involved in AI, but maybe we should just kind of slow down and see how things play out. So the first company that says that, you might see a rally, almost like that Meta rally. People kind of go, that's enough for now. Let's kind of see how what we've done plays out, if that actually yields any results. Now, maybe that's being a little bit naive and you just have to keep spending and keep spending. But I kind of have that feeling. And I think, for me, Meta's already making money off AI. They are the premier company. They're going to get slammed like everybody else. Why not? But here's your Meta. Kind of, look, it's given back the pump from earnings for sure, but it's kind of hanging in there. And a company like that, recession's probably better for them. They're not going to spend money on ads anywhere else because they're the kings. They're the absolute unequivocal kings of ad spending. You're going to probably funnel all your ad spending into Meta because that's where you're going to get your return, even if it's more expensive, in my opinion. And so they are already, even though in their report, I think they like to slow play things. They said, we're not, AI. The fact is they're the ones who've been advertising AI for 12 years. I think it benefits somebody like that. I think it benefits Amazon. And again, Amazon is not recession proof, but people do. They want to save money. Good times or bad times, they want to save money. So Amazon to me is very interesting. And they continue to cloud and I think, I think AI initiatives, which is nothing new to them at all, I think those continue to yield benefit to companies like that. So somebody like like an Nvidia, I don't know. I'm a little worried. I mean, look, they've already taken the heck out of it. Let's take a look at Nvidia here. Maybe it's got a shot to get down to this 50 weekly just for a final flush. I mean, for a trade, I don't think you probably can't do too wrong for a trade on this, like a kind of defined risk trade. Um, but there's no question that this is unraveled. And I think the news flow may not be as positive going forward. So that's what you're going to have. You're going to have that headwind. What have you had here? You've had nothing but tailwinds. I had a client short like 7,000 Nvidia from here to here. And I told him, I said, what are you doing? You're battling positive news flow. All people can do is put out headlines about how fantastic Nvidia is. Maybe that news flow will start to turn the corner at some point as people kind of go, and I bought enough GPUs. Thank you very much. Um, and so that's something that you're going to continue to battle here. And I think just the same way, while we're certainly due for bounces and everything, here's Microsoft under 390, starts to look maybe a little interesting. There's your 50-week again. Um, Again, they've had that big AI push. So if there's any puncture in the AI bubble, the generals, the Microsoft and the NVIDIA, the generals maybe have a bit of a struggle on their hands. Maybe not now, maybe not 2 months from now, but you have to kind of look at what's happened to these things, trillions of dollars in market cap, just going and going and going and going on this theme. Um, that's not to say that AI is dead. I don't think this is, you know, you know, cannabis, right? This is here to stay. But just as in the 90s, the internet was here to stay, there were still lots of train wrecks. These guys are not going to be train wrecks. There will be many train wrecks in the AI winter when it comes. Not if, it'll come. There'll be an AI winter for stocks. It's going to happen. Lot of private equity, lot of AI companies in the wings, and for sure they're probably still going to get a bit of a tailwind for a while, but a little skeptical. Not of the technology and maybe of how useful it can be. Is it an expensive chatbot or is it actually something useful? Now, if it's an expensive chatbot, that could work for Meta, that could work for Amazon, but it's going to work for every Tom, Dick, and Harry who wants to be a part of AI. Is it going to revolutionize everyone's business? I don't know. I don't know. Okay, let's take a look at some other interesting things, guys. What have we got here? We've got the Qs down 3.84%. It's a big improvement. Um, Here's your 10-year, 10 to 2 on inverted for 750 days. So this is a new picture. It's a new picture. Here's your Microsoft down into, we blasted through here, unfortunately, on the daily. I think what we're going to have to accept is that while we could get a rally in here, there has been a significant amount of damage. Here's your Microsoft. It's broken this line. I have no doubt that we can come back and start to retest these kinds of lines here. Here's your AMD. AMD has just been a tough one, a tough one. A little more expensive than Nvidia, which probably hasn't helped. Why would you pay more for AMD? Um, Down into that 120 kind of zone, almost really giving up a good chunk of this whole rally. And that makes me think of Dell, of course, the servers that everyone's going to need for this new AI race, uh, half price. Dell is half price. Unbelievable. The deja vu of Dell. When that started going again, I thought, wow, is it 1999 again? I remember trading that thing. It was the must own, just like Cisco, which didn't do anything for what, decades after it burst. Um, what do we got on the safety side here? Yeah, burgers. Burgers are still okay. We've got McDonald's here. Uh, they got their $5 meal, which they're going to extend. That's going to help a lot of people. It's not going to help them be healthy, but it's going to help them eat. And so people are kind of hiding in McDonald's. Very, very nice $30 rally there. Meta we've looked at. Let's take a look at Apple. I don't know why I've got this little like dot here on my screen. It's really, really annoying. Some sort of program, and I can't get rid of it. So here's your Apple. Look at what's happened here. Well, that's pretty interesting. It traded almost down to 195 and back to 210. So here we go. This is the Buffett sale, but also, broader markets. Again, Apple, I think is interesting. I don't think, I mean, yeah, okay, they haven't, fundamentally, they haven't done great in the last couple of years, but they keep buying back stock. That's what they seem to be good at. Tim Cook is earning every penny of his hundreds of millions of dollars just because he's such a good financial engine. He wants some more stock. That's what we're good at. But hey, I don't mind cannibal stocks. I love companies that buy back their own stock. Helps me as a shareholder. Qualcomm, another, Apple AI in your pocket. Another interesting thing, right? So as we kind of look at that difference between overhyped AI and usable AI, people want AI pockets. Maybe that doesn't come into play in the next upgrade cycle or in the immediate kind of early fall cycle, but at some point AI in your pocket is important. And so Apple and Qualcomm kind of interesting, like as names really sold off hard that where you can hide. I mean, I'd obviously like to see, if you technicals, you want to see the MACD kind of start to get going again. This is straight down, it's unwinding. So, you can try to catch a falling knife, and that's where a lot of people go wrong. Why do they catch a falling? Why do they try? Because they're trying to catch a bottom. Why are you trying to catch a bottom? I tell my students that all the time. Like when everything is pointing in down, why are you smarter than the market? So, I like to kind of wait. I might miss the bottom, but at least if things start acting again and give me some reason to be positive, that's when I like to get in. So I had somebody reach out to me and say, I keep getting killed buying calls. I said, what are you doing? Well, she said, I'm buying calls into, Amazon keeps falling and I keep looking for that bounce and saying, why are you betting against what the market is telling you? Amazon. But right now, what do you have against you? Okay, first of all, upside calls are generally a kind of a negative. And she's buying shorter term ones. I said, you're doing all the wrong things. You're buying short term. You're paying up through the nose for vol. You're paying up for skew. You've got those upside calls pretty expensive because when that, when Amazon sells off, what are people doing? Well, they're doing what you're doing, trying to buy upside calls. It's pushing up skew. So you're buying options that are generally already expensive most of the time. You're doing all the wrong things and you don't have momentum in your favor. So you've got the trifecta of things that are working against you as a call buyer. And I'm not saying I'm, you know, Nostradamus here and I know what's going to happen, but I know what typically doesn't do well. If you absolutely have to do something like that, give yourself some time. Give yourself some time, especially now, all these option pricing, short-term option prices are going to be off the charts here. So yeah, there's a lot of movement out there, and maybe we get a bounce back on some of these things, but you're buying expensive vol. Now the whole curve has probably moved up, so all options are a little bit expensive. So you've got that big exposure. So if you start buying, I say the only way to do it is kind of at least give yourself 4 months, 4 or 5 months. It gives you, look, we can't control much in markets, but what we can control is the duration of the option that we trade. So give yourself one of the things that you can control, and that's time. Give yourself time. How often have you had a great idea only to be early and have your position expire and then you were right in the end? Give yourself time. That's one thing that we have the luxury of being able to give ourselves. So when I look for a move, first of all, I want momentum. I'm not buying calls into this because this tells me that things are not going well. And I like to watch that 9-day EMA. So when you guys are trading, whether it's stock, options, whatever, once the picture changes, so this is, look at that 9 EMA, look at how nice it is as it supports something that's in a good trend. Okay, we break through here a little bit, but we recovered that day. We keep bouncing up to here. Then we break the 9 decidedly, and we also break the 20. So this is a new picture here. I put out a tweet about this the other day. I said, when the picture changes, this is what I call the transition. You're used to this. You're selling puts here and here and here, and you're collecting all this money, and this couldn't feel any easier. But then when this happens, why do you keep doing it? Why do you keep selling puts? This is a new picture here. And so when I'm talking to students, I say, listen, don't forget the transition. The transition is something you've got to be aware of, and it's easy to forget about it, right? Let me see if I can find that good example of the transition here. Yeah, here we go. So we've got semiconductors. Everyone's getting destroyed on semiconductors. Well, where was the confusion? We had an unbelievable market bound off of this 9 EMA over and over and over again. And then we kind of breach it here and it keeps going. Okay, fine. It jumps back up again to form a double top. And we saw it was a bit around there. And then if you're watching relative strength, which is something I like to look at, you would have noticed that things started to change. So here, as the SMH was coming off, if we look at relative strength, and I know Samantha loves to look at relative performance as well, and I think it's fantastic because if you have an individual stock idea, it's great to have support from the overall sector or the group or whatever it is you're trading. It doesn't have to be a sector. It can be just a group of stocks and just use an ETF for that. Do SMH : SPY on stock charts. Now you've got the relative, you've got the relationship between semiconductors and SPY. Here where semiconductors are outperforming. Here they're not. Here they are. But here, even though semiconductors started to recover and do that double top, we can see that versus the SPY, it failed through this line and then came down into here. Now this is a very new picture. So this is your transition, right? When we go from here to here, that's the transition. And this is where a lot of traders go wrong because this is recency bias, right? This is what you remember. It was easy, it was easy, it was easy, it was easy selling puts or buying in the money calls or whatever it was you're doing. And then here, something changed. So why keep doing that? And the problem is the end of a good campaign, like a put selling campaign, let's call it, the end of a good campaign often ends with a loss. That is something that is very hard for students to understand. Let's take a look at markets here. Okay, Apple bounced to 211, still trading at 208. So we've got NASDAQ down 4%, a little bit of a recovery here. Before I get back to this, let's take a look at our curve. Wow. VIX 55 really hasn't come off at all, has it? This is what I mean by volatility can cluster. It can stay low, it can stay high. Now, this is particularly fearful, this picture, right? Like, I mean, it could be worse. This front future is actually kind of behaving. We haven't gotten things extremely steep in those first two futures. This is still fairly flat, which is quite amazing that it's backwardated for sure. Each subsequent month is lower and lower and lower. So that's definitely a sign of a lot of panic, of a lot of fear, but not full on all out panic. That would look more like, like, let me show you. Here's October 16th, 2008. Now that's pretty panicky, right? When they jam that front future up, that is when everyone is very, very fearful and really panicking. Although we knew things got worse in early 2009. So if we look at this again, you can think of the VIX futures as being more something that institutions use. And so I wouldn't be surprised, like Friday, if we saw the VIX cash, which is the one you see on TV all the time. I wouldn't be surprised if that comes down as people sort of monetize some of hedges, those lucky people who have hedges, they monetize those, they start to look for yield opportunities, right? This whole income generation from selling puts and selling put spreads and things of those nature. We could see VIX kind of come back down, but the futures stay a little bit bid. We've also got Iran, Israel, right? That's also the consideration is, are things escalating over there? And is that an overnight shoe drop that people don't want to take a risk into? And that could keep these futures relatively high and backwardated like this, relatively fearful. Now, if we get to a point, maybe a recovery in a couple days where things start to look a little better, and we get these front futures kind of uninverting, maybe that becomes a bit constructive. Now, you're not going to pick the bottom in the market, but in the volatility world, if you're truly trying to avoid those massive drawdowns, this is what you're looking for. And getting back in isn't now. So I know a lot of good volatility traders, they're not excited about this. They're not putting on downside VIX plays at this point. They'd rather put them on when the VIX is 45 or 42 again, but it looks like you've got a tail behind you. Right now, we have no clue where this is going to go. Is it going to get worse? Is it going to get better? Now you could look at some downside flies and things like that. Downside is extremely expensive. If you're to look at things like VXX, Let's take a look at VXX here. Never just short something like VXX because something awful is happening, right? So, there's one person I see on Twitter and he's like, oh yeah, just short these things. All you have to do is just keep shorting, right? Take your money, dollar cost average into the play, and it'll eventually work out. Yeah, eventually it'll work out because these products, something like VXX, is essentially designed to go to zero. It's going to go to zero. I mean, it goes to zero, but then it goes towards zero, and then they reverse split, and then you do it all over again. It keeps reverse splitting. But the long-term chart on VXX, which is the long VIX futures ETN, the long-term chart on this is it's down 99.9% because you can think of it as just buying way out of the money puts and they just go to zero most of the time in the market. So it's not that it's doing anything that it shouldn't be doing, but it's people think this is VIX. So be careful. Do not own something like this thinking that it's VIX. VIX bottoms around 11, 12, 10 occasionally. It's a rolling snapshot of where prices are. This is not a rolling snapshot. This involves decay, which maybe I'll go over another day this week and explain how these products actually make or lose money. But the person saying, well, all you need to do is just keep shorting it. Yeah, okay. Good luck with that when this thing opens at 110 tomorrow and you've blown out your account over 3 times over. So the only way you want to play these kinds of things for a reversion back down, which is going to happen, is to use things like butterflies on the way down, limited risk kinds of plays, because the volatility is absolutely astronomical in a product like this right now. To buy that downside is very expensive. Archna, are you seeing anything interesting out there? Everyone's probably busy trading. You guys are probably saving me money. I'm not trading. Here's your Microsoft 385 has bounced to 395. I mean, we could get back up in here. Hey, Nell. Hey, go ahead, Nell.
Hey, what's up? How are you guys doing? How are you doing, Hans?
Good. How are you?
I'm pretty fine. I'm pretty fine. I'm very happy with what the market is offering today, despite a lot of people being angry. I kind of called this on Friday, so I'm very happy with it. I also needed some NVIDIA weakness to tap my target, so I'm
Nice.
definitely, yeah, I'm definitely on a good spot today. Arkna, if you want to talk, you can just raise your hand on the Zoom and just join, right? Hans should add you here.
Yeah. I think
And
our
Argna was also calling out like kind of a weakness in the market when we saw the first bounce, especially on the indexes. So I'm very happy that we both kind of aligned on that weakness. She was targeting a little bit higher, right? But obviously, this kind of like risk over the weekend is sometimes you cannot really expect it coming, right?
Staples are
no
lining up on my scanner. Staples are getting flows.
staples.
Staples.
Oh, we've got the Nasdaq down 3.5 only.
I'll be honest with you, I shorted like 5 minutes ago. In my opinion, I think we're not out of the woods, especially if the VIX is about, if it bounces here, there's bound to be another volatility unwind, right? But the market has done pretty well in trying to recover the levels that they have to recover. So there's gotta be respect on that. I'm just simply chase shorting, right? It's not really a longer term position. I want to trade it for the day, basically, and I'm just doing, not doing options today. So, but yeah,
Yeah.
that's about it. I'm still short a little bit. I'm gonna chase it, see if the weakness keeps on, and let's see. It's a dangerous market out there, to be honest. So,
Yeah,
uh,
it is dangerous. And what you have to realize is that in this kind of VIX environment, really anything over kind of 20 is you're going to get a lot of extreme moves in both directions. So the bear rallies are going to be huge. The bull sell-offs are going to be huge as well. So you have to be, so what I like to say is when you're trading options, this is not about theta, right? You're not, I mean, there's some vega here. So if you're short, if you're short a very, very high volatility, you can certainly scalp some vega, which means if the volatility comes down, you can make money off of that. But you're not trading for theta here. You're not selling something and going, okay, I'm going to make $40 a day on theta, on short theta. This is about gamma. So things are moving around. You can, I like to say ABC, always be closing, because every day is going to look different.
Always
Now,
be
maybe,
close is my motto as well. So I'm happy
there you go.
that.
Always be closing. Yeah, I borrowed that from Glenn Ross. Um, who's the actor? Alec Baldwin. Always be closing.
Always be close. I was tell, we do huddles right after this live training, right? We do huddles on Slack where we basically discuss the markets as well with Samantha's insight. And I tend to do some kind of options educations to the people that are like Chase. This is not for club only. This is a Chase tier, which is a lower tier. So I'm the one that's like, assigned to talk to them and stuff. And I always give them that said advice. I'm always like, just the ABC of the market has to be always be closing. Do not like sit out with positions because like what if it goes no man, just take some positions if you want, or organize it someone different, but don't be greedy. Being greedy in the market is never good.
No, no, exactly. And you have to understand where your torque comes from. So people tend to look at, they look at all markets the same sometimes when they're trading options, and they're not understand the volatility regime. Now we're in a breakneck volatility regime, and we don't know how long that's going to last for, but your torque is coming from movement. It's gamma, right? So you're making money off of, you sell a put for $5, and I'd be happy to grab 40% of that in this kind of market. I wouldn't be looking like now when the VIX is 13 or 14, you can wait for 80% capture, because a lot of your benefit is just in the market doing nothing. It's the theta benefit. That's your torque. Right now, your torque is in trading. And so, maybe we get a rally to down 2%. Tomorrow we could be down 3% again. So we have to understand that in this kind of market, anything can happen. So it's now if you're buying things for your kids' investment account, then terrific. You're not flipping that around. But in a trading account, take your money, take your profits where you can, and look for the next opportunity, because opportunities are like streetcars in this kind of market. They're everywhere. They're all over the place. Set up a chart, look at a 2-hour chart, pick your spots, throw on a Bollinger Band and an RSI, and kind of try to trade those ranges. What do we got here? Down 4% in NASDAQ. So even with this rally, though, we haven't. Let's take a look here. The curve's it's flattened a bit in the front part of the VIX futures curve. So, the VIX isn't really moving, and the futures have come down a little.
Yeah, I think my main problem with the VIX is that it's at a bounce zone. So it's not a matter of it should be moving higher, because it shouldn't, right? It's not, it doesn't need to. It's a matter of it's not breaking down. That's why I shorted. So like it's more of a me looking at the VIX and thinking, if this was going to go higher, right? VIX should be collapsing. The fact that it's holding the level it's holding right now, it's making me very uneasy on the
It's true.
upper side, right? In the climb.
I would have to agree with you. There's some durable pain out there. Something's breaking. We don't know exactly what it is, but someone's offside. A few people are offside. Of course, everyone, I've heard from a few people, I've heard of these certain funds blowing up. It's all anecdotal, but clearly the market is telling you that that's a big VIX move for the kind of down market that we have, right? S&P down 3%, you've got VIX more than doubling. That's not normal. But
Yep.
that's how things go sometimes, right? GME going from 11 to 67 isn't normal either. And the problem is, if you get in the way, you can really get hurt. So the key in this kind of market is don't be a hero. Keep your positions very defined. It's a great opportunity to get in, like in a long-term account. If you're somebody who wants to dollar cost average over time, great, perfect. This is you welcome something like this. Sure, you're getting hit, in your account. But these are nice opportunities. But from a trader standpoint, I agree with you. Oh, here we go. Arkna.
I'm not sure. I think the SPX at the very least the SPX has to bounce around here. I'm more of a technical trader, right? I don't do macro to micro like Samantha. I'm very bad at macro actually, which is a very good tandem with Samantha because she helps me with the macro perspective. I'm more of a technical trader. I basically do my charts and I trade around them, right? And the
Yeah.
SPX where it's bouncing right now, this green candle that is putting, I think it's basically where it has to. Like I'm down to like cover my shorts here and just take like the $400 I made, and that's more than enough, right? And just like respect the fact that they're bouncing it here, because if they do bounce it here, then there's gonna be another high for the day on this. I'm almost certain because of where
Yeah.
it's bouncing, right? Technically, so
Yeah,
Right.
so we had ISM's services number that came in good. That's why we had that bounce. But then we are again back lower.
Yeah.
Yeah. So I got a question in your channel. There was a question. Colin wanted to sell volatility. So he was like, can I sell put spreads? I'm like, if you want to sell volatility, you're supposed to sell call spreads, but the spreads are too wide. Trying to even sell 80, 75 was too much. The spread was not too bad. So there's no point trying to do that either.
Yeah, I mean, you can, if you have an idea of where the value is, you can throw that in. It might execute, so you don't necessarily need to trade on those markets. And I imagine there's all sorts of liquidity happening in between the markets, but you kind of have to have a good idea of, what
I
makes
mean,
sense to you.
September 18th, which is the monthly, the 75 call is 0.03 to 2.25 bid.
Oh,
How are you going to sell? And 80 has zero bid. So there's no way you can actually even sell call spreads right now because they are so wide. It's better
right.
to just be on the sidelines, unless you are just.
Yeah, I think so. And I think you want to give yourself, I think don't underestimate that this could be a little bit durable. Like with the severity of this sell-off and this volatility move, I believe that VXX, for example, is going to be back to 50 at some point. But you better give yourself probably 3 or 4 months. So I would play, and I would definitely give yourself do like a put spread. Like, you buy like a 65, 55 kind of put spread. Like the vol's so high, you've got to spread it. You can't just buy, like the vol is just huge. If you just buy a put, you might keep on a $30 down move in VXX kind of thing. So the problem is
selling in the money put spreads would be a better idea for November, right? Or December.
I was about to ask because I'm not doing options today because of the price of the options. They are absolutely jacked, and
yeah, they are. Yeah, there's a bit of chaos.
yeah.
in
So I did
options.
stock, right? I basically sold lots on the SPX on my account. But the thing is, like, is it a good idea to sell options today? Because like with this VIX, right? I kind of want to sell some stuff, like some make use of that volatility, that fear that might come down eventually, right? As we start coming down, we could go lower, and the VIX could still go low as long as we go slow enough, right? Um, as
Yeah.
the dealers readjust, right? With the volatility just gets crushed, and we slowly drift down, and then the bearish dream happens without the VIX going to like 100, right? So making use of that VIX to sell some stuff. What do you think? I think Arkna, that's a good idea.
I mean, if you want to buy, short wicks, or you can buy put spreads, but December, it's too wide. I'm trying to buy, say, December, because election is also done, right? If election is done, all the things are gone. Let's say we go below 25 again, right? So if I'm trying to even buy a 25-20 calls put spread, it's like almost $3. What are you going to make out of it? No, nothing.
That's why I mean
Yeah.
selling puts, right? If you sell puts on stock you would like to buy at certain prices here, you're making use of the volatility, right? So you're selling it for so much that even if it doesn't go your way, at some point the volatility is going to crash and that contract is going to be green for you.
Yeah, absolutely.
Selling puts is the way to go right now for a stock that you want to own. Don't try to just get into something that you know.
Yeah.
I agree. I think, Nell, this is what you've been waiting for. You've had a pullback in the market, you've had an outsized volatility move, or the VIX is back to 43. You've had an outsized volatility move, unless mine is delayed. Let me take a look here. Yeah, this is it, right? I mean, this is what Buffett did in the financial crisis. He sold a whole bunch of puts that were trading at insane levels. So the thing is, VIX, a 16 VIX is about a 1%. It's implying about a 1% per day move until, over the next 30 days. So you can extrapolate that. 32 is 2%, 48, so on and so forth. What's the next one? 64. So 64, which is where we're at, that's implying like 4%, 5%. 4%. It's implying 4% of S&P movement per day. Now we're getting that today, but that's hard to do every day. So I think you're getting some decent pricing there. If we get back up there and the market pushes towards 5,100, I think that's kind of a dream to get and, do some put sales that you were talking about.
Yeah, when we do the huddles, we also discuss, right, about VIX. A lot of people have the misconception that VIX going higher is simply market going lower, which is the case on a lot of times because of how violent the sells are compared to the uptrend, right? Most of the times. But the VIX does not signal that the VIX could still go down and the market could still be going down, just lower, right? So betting on that VIX being elevated to sell your puts is not a bad idea, even if the market goes down, because even if the deltas are going against you, right, your volatility is going to crash unless the market keeps crashing like crazy. So
yeah, you're going to get a nice Vega bump there. For sure. You're going to benefit from that. And that's, when things get that extreme. Now we're back to 43. So we could go, it may have been good to just kind of wait and see. Now we've established a high, right? So now this can be an advantage. So if we get back towards the high 50s and the market isn't getting too crazy and selling off, then that might be interesting again. Take a look here.
It's going to be a very interesting day for sure to take a look at.
42, I'm showing a high of 56, but on my other platform, I'm showing a high of 65. So we've got a little bit different. This is going to be after market open, I think. I think the VIX, what have you guys got? I think it traded as high as 65.
The high 65.73. Yes, that's my high.
Yeah. Okay. That's pretty bonkers. So let's take a look at sometimes what you get is you get the front, you get the inversion, but it's interesting that the inversion didn't get worse today. I'm not sure how I feel about that. It's the level of VIX is very, very panicky. The inversion, the backwardation, the futures isn't as panicky. Maybe that's to be expected because retail kind of pushes VIX cash a little bit more than the futures. Futures tend to be more institutional, maybe steadier money, kind of. It's a little bit more calm from a more calm perspective when you think of the futures. So, so
I'll
yeah,
I'll
go
tell
ahead.
you what I think. I think a lot of this VIX price is not related so much to the market and the bad news, which we knew for a while, but are more in the war kind of panic, right? Because people like Iran and all this conflict, right? Apart from like the bad stuff that's going on, I think a lot of people are like kind of doomsday pushing the volatility in the markets, right?
Yeah.
But I think that's going to settle. I think the markets have to go down, right? Because of how the economy is, the markets have to go down. In my opinion, we're going to keep going down. But I think not at this speed. It's going to be just a slow bleed of the market. And what's going on right now, I think it's more of a, like I said, war-induced panic that's like everything is crashing. We're going to die, right?
Yeah. Yeah.
So
There's
that would,
the
yeah, no, no. I
potential
would say
for
because like
war.
that. Oh, sorry,
Go
sorry.
ahead.
Go.
Yeah, go ahead. Sorry.
Oh, no, I would say because you said like the backwardation and how the VIX levels are high, but it's not correlating with other, it could be exactly that, right?
Yeah. It's not a strange thing is it's panicky because VIX at 65, but we're getting close to where we had existential questions back in 2020, right? People were pretty worried about things, even though it was overblown by a million miles in terms of the virus. But at the time, people were fearful that it was going to turn into The Stand from Stephen King, which wasn't good. So you got, like we got kind of within a stone's throw of that kind of volatility. That's kind of crazy volatility for for the for the fundamental reasoning. So that's why there's something else going on. Is it the war? It could be. There are reports of Russian planes, cargo planes landing in Iran, and that Russia's going to kind of support this effort to retaliate against Israel. That, of course, wouldn't be a good thing, but that typically doesn't worry markets too much. I mean, it can if it's kind of spirals out of control. No one wants World War III, so that's part of it. But there's this carry trade. It just really has to be part of it. But at the same time, I almost wonder, and I'm no expert in that area, like a quarter point, my goodness, that carry trade still looks fantastic. Still looks
Yeah,
fantastic, right?
it does.
So what's the problem? Or is it just that we always have to look at things at the margin, right? It's always about the marginal change in the environment that can change things, right? It's when investors expected $3 in earnings and it comes in at 298, well, then that's a disappointment, even though 298 is fantastic, right? So we always have to look at things at the margin because markets at any given time are looking at things as a whole. And if the slightest thing changes, then that can rattle things. But
I honestly I would love to discuss this kind of like thing with you, but I'm terrible at macro. You wouldn't want my takes. I don't understand the American economy, macro economy as much as other people because I'm European. So it's really hard
yeah,
to
yeah,
follow up.
right. Yeah, you've got a different, it's a different place, right? You've got, people like to save, they like, there's a lot more regulation. It's very different. This is, America is very balls to the wall consumerism. And did you see those like savings numbers after COVID? I mean, the whole rest of the world was still saving, and Americans were like spending, like drawing down savings like crazy. I mean, Americans are awesome for economies. And so I don't think that's going to change at all. A, uh, that is just a reality of it all. And so let's take a look at this then. So I love this stuff from Apollo. I recommend that you look for their stuff. So restaurant bookings, fantastic. Daily data for US travel, fantastic. Following seasonal, actually better than pre-COVID. Daily job postings down a little bit. Withheld income tax receipts, totally on trend, a little bit better even. Gasoline prices, okay. Okay. I mean, we've seen commodities come down a lot, so that's going to be good. That's disinflationary. That's good for spending. You've got the Baltic Dry Index, so like shipping coming down as well. Definitely a sign, there's definitely some signs of some slowing, but New York City Mobility Indicator. Well, this is an interesting one, eh? You've got subways, buses, bridges, and tunnels. This looks fine. Weekly data, same store retail sales. Yeah, even retail, it's okay.
The VIX might put another leg up now on technicals.
Is it going for another
Yeah.
run to the upside?
That looks like it. Yeah, that would mean that the market has stopped for today.
Yeah. US jobless claims. Okay, I get it. There's the somnol stuff. People got excited about that too. One thing's for sure, they're going to be very data dependent at this point, economically data dependent, right? So we went from being, bad news was good news because we wanted inflation to come down. Now that that's happened to a large extent, even though they're lying about most of the inflation, it's still pretty high. But okay, that aside, now bad news is bad news. Because if rates are going to come down for inflation, that's one thing. And as I was saying earlier, if they come down for a harder landing, and that's another thing. But there's just not a lot of data to support that at this point. Maybe we see a reversal of the wealth effect to some extent. Stocks come down, but look at where we've come from. I mean, holy moly.
What is IWF?
Sorry, say again.
IWF. I saw flow in IWF, that usually doesn't happen. They're selling puts in IWF for this week. No, for next week.
Oh yeah, Samantha likes to look it up, right? Russell growth.
Yeah, they're selling puts. So people are trying to put in a bottom, at least in that maybe.
Yeah, here's your Russell growth. And then I can't remember the other one she looks at, but I look at CAF, which is, so growth has come off versus CAF is small cap, but cash rich. So CAF is like taking quality out of the Russell, which I think is important to do because there's so much crap in the Russell 2000. It's not funny. So if you take the quality out of there, you get CAF. I think Samantha uses something other than that, but so growth, obviously did well and came off here. So you're saying there's a bunch of put selling in IWF going on?
Yeah, not a lot, but for 816 for options expiration. I was looking at flows, yeah.
Yeah, not a bad level. I mean, we can.
But then there is, oh my God, IWM. 42 million they're buying puts, 199, 189, 30 million, 21. That's together almost 80 million puts were bought in a suite for September.
Yeah. Well,
It's a call spread. It's a put spread, 199, 189 put spread bought.
I mean, this is not a good picture on small caps, right? So lower rates are good for small caps. They are, it's not a huge market cap, but small caps can really, really obviously benefit. They're levered. So obviously they don't care right now that lower rates are going to be better because they're focused on, well, part of it is being focused on growth, but I think it's a little early to be too worried about growth. And I don't think last week's data was, a game changer, but this is interesting to me. I think there's some value here.
My friend just called me. She was not able to get into Schwab.
Oh, wow.
Schwab is down.
Schwab is down. Perfect.
Oh, Fidelity's Active Trader Pro is also down. So
Even
it's not just,
even Vanguard is having issues.
yeah, everyone's having issues today.
Oh, can you believe these guys? That's
How
awful.
coincidental, right?
Yeah.
Vanguard is down
That's your
about
circuit breaker. That's the Schwab and Vanguard circuit breaker. You can't
You're not
trade
wrong.
anymore. We want people to stop selling. Powell just put out the note, closed all the brokerages. I think the circuit breaker is at 5,000. I think the first one is. And then somebody was saying there's some rule there where at 3:45 they actually turn off the circuit breakers. Like I think if things get worse past a certain point in the day, then they go wherever they want to go. There's no halt, I believe, but I don't take my word for it. I'm fairly sure of that, but
I have no idea how it works.
yeah,
It happened during COVID, right?
yeah.
But
Wow.
I was not aware of what was going on. So
Okay, so I'm just seeing somebody bought 61 calls January 2021 in CMG. Not
I like
bad.
that.
It's
I
not a
like
bad
that.
play.
I like CMG here. I think people
Yeah,
are going
it's
to be
not a
buying
bad
Dorito.
play. It's not a
Yeah.
bad play. 61 call. They bought it for 217. Now you can probably buy it for 220. It's a 30 delta, January 2025. Not a bad play, actually.
Any idea how much the January is up? Is it up? I wonder how many vol points it's up. Like you want to be careful with your Vega there, but it's probably not up much. It's probably the front part of the up, you know, the bulk of the
Yeah,
volatility.
people are following that. It just came in. It just came in 2 minutes ago and they're buying it. So, I mean, the way I would configure a trade here, if you're willing to buy, you can sell puts to buy. So that's how you negate the Vega or anything that has come up.
That's
And
true.
the 100 week is at around 43, so if you could actually make it a free trade, sell the 45 to buy the 61, and you're getting 20 cents credit.
Yeah, let's take a look here. Yeah, I think it looks interesting again. I agree. I mean, 48 was better than 51, but this is close enough for government work. I think that's a very interesting play. I bought some last week, so I'm already
Yeah,
in.
and the buying power effect is not that bad. Even not in a regular margin account, the buying power is only 666. I like the trade.
What does it cost you to sell? Let's say we did a.
I'm trying to sell a 45 to buy the 61 in January 2025 in CMG for 25 cents credit. It's not filling me right now. Let's see,
Oh, okay. So about 235 for the put. You get 235 for the put, and then buy the 61 for 230. Yeah. Yeah, you can do it for a small credit, right?
Yeah.
Or even more. Yeah, 20 cents if you do the 62. I think that's a pretty good play. And then worst case, you own it at 45, which is pretty darn low.
So 43, more than 43, approximately at 43 level is the 100 week. And if you look at the bottom that was done in October 2023, 78.6 retracement is at 43. So, my cost basis getting a 25 cent credit for a 45 would be approximately 44.75, even if I get put the stock. And that's approximately, you're talking about 100 week. CMG people. My son buys a lot of Chipotle, so I need to trade that to make money for him.
Yeah. Hey, look, and I think that's not a bad place to hide. I mean, I think they've been converting customers to CMG, to Chipotle. I think it's a good recession play. It's it's fairly safe. It's come off a lot from those split highs. So, you're getting it at December 2024 levels. You're almost getting it at May, June 2023 levels. That's not bad. It's not bad at all. I mean, sure, it could go to 36, but I'd say, I kind of like McDonald's and Chipotle here. I own McDonald's. Actually, I own both. But unfortunately, I own Intel as well. See how Intel is doing today. More pain. I had this, let me show you guys.
I own NVIDIA as of today.
All right. Is that the first time you've owned it?
I mean, on my long-term portfolio, it's the first batch. I did trade it in the past, but not on my long-term.
Yeah. So here's your let's go like this. Here's your US manufacturing capacity. Looks pretty good to me. Look at this. The resurgence in US manufacturing. Get Trump in there and it's off to the races. So, I mean, I don't know. In something like Intel seems to broke, but this is an interesting trade. I think, sure, the economy might slow a little bit, but this is quite interesting. And both parties are going to want to spend money. Some want to raise taxes, some want to drop them. So a little bit of different approach there.
So the CMG trade is sell the 45 put to buy the 61 call for January. I'm trying to get it for 25 cents credit, which I'm not yet being able to fill.
Yeah. I think Apple looks interesting. I think maybe Starbucks. I think with Elliott involved there, maybe you can hide in coffee and hamburgers, in burritos. Those probably aren't bad places to hide a little bit. And I mean, look, I think tech it's going to get interesting. I like Netflix too. I think that's, it's not super cheap, but I think no one ever gets rid of their Netflix. Not a chance will anyone ever get rid of their Netflix. My kids would kill me. Costco is interesting too, but it's expensive. It's expensive, that stock, but no one's getting rid of their Costco membership. Not a single person will cancel their membership because they're raising prices $5. Not a single one. And if times get tough, people are going to want to go and save money. They love that sort of formula. I don't know why. I mean, I like it, but my wife hates it. She's like, oh my God, I don't want to go to a warehouse. She likes things to be nice. She likes Saks Fifth Avenue. And I'm like, that's too expensive. Let's go to Costco. It looks like crap, but at least you can save some money. I get 3 times the amount of coffee that I get for the same price. I bought some pool chemicals, what the heck was it? Shock. I got 3 times. I got 18 kilos versus 6 kilos for $4 less than I was going to pay at the pool store. 3 times as much for $3 less. And I get my 2% back on my Costco card. Like, it's just, I mean, I like that name. It's just come so far.
I'm trying to change it because it's not working. So the calls are getting bid up. Okay, I got filled for 45 cents credit. I changed it to selling 46 puts.
Oh, okay. They're just not filling you, eh? Are you mid-market?
No. I just changed it to 46 puts instead of 45.
Yeah.
That's how I made it. So now I have almost 45 cents for credit for CMG, where I sold 46 puts, bought the 61 call for January.
Yeah.
That
Oh, look at that.
I'm fine.
AMD's up on the day. That's interesting. It's completely it goes opposite to everything else. Everything else is good, AMD goes down. Everything else is bad, AMD goes up. It's a weird semiconductor. Goldman Sachs, I mean, I love that company. That is one hell of a bank, and they always figure out how to make money. So I think Goldman looks kind of interesting here. It's back to what is that?
I posted my trade.
Oh, you did? Okay.
Damn, Mark, no, I'm so upset. Do you remember we were discussing about Apple and where it would go to bounce and how I was gonna buy it at the 197? It went there today and I didn't realize. I don't know why I didn't check Apple.
It was quick, eh? It happened fairly quickly.
Yeah, I was looking for this level. It was literally my bounce level, and
Yeah.
I didn't get it.
Because on a day like this, you second guess yourself because there's something else is going on out there. It's like there's something
Yeah.
that we don't understand, and so it prevents us from, sticking to the plan kind of thing.
It's also more of a funny thing because I did not check Apple. Like everything was so red. I was checking so many charts, right? Because like so many things are going on that I forgot to check Apple. I simply forgot. If I checked it, I would have been like, hey, I should buy this.
Yeah.
But I just didn't see it at all. Crazy. It happens.
Novo looks kind of interesting. I mean, people are going to like the obesity drugs, I think. That might be, sure, they've had a good run, but that's not too bad. We're getting close to the 200-day.
In this sea of red, AMD is green, by the way.
Yeah, I saw that. That's amazing.
Even Atlassian is green.
What's the symbol on that one?
Team, TEAM.
Yeah, team is green too.
And I mean, if you look at it, even though XLRE fell gap down, it's about to take out it's at almost its highs for the day today.
Yeah.
We hold up in housing, how do we collapse in the market? I don't know how does that happen.
No, I think it's still it's it's a little bit defensive, of course. It can be not as much as some other sectors, but it's a pretty good place to hide. And structurally, you just don't have enough housing. If rates come down, it should kind of, I think in a weird way, if rates come down, it'll loosen up some inventory in a way, right? Because now people don't want to move because it doesn't make sense. They don't want to move up in a mortgage. So if you bring rates down, then that kind of that sort of injects oil into the system again. The gears start turning. You get some existing sale inventory. So maybe it isn't as good for the home builders because they're benefiting from existing supply being a little bit frozen. So they can get in and they can get creative, right? They can sell a house for less than a resale because they just put crappier finishings in and they build a smaller house. And so they kind of have a lot of power in a higher rate environment. I wonder if that changes a little bit as you loosen up supply of existing homes, potentially. I don't know. You know what I mean?
You want to know when Solar Edge is green?
Oh my
Solar
God.
Edge. Hey, lower rates. There you go. Lower rates are good for solar stocks. Let's see here. FSLR.
Crypto
FS.
could be a good buy. right now.
Yeah, for solar
BTC.
schema.
BTC could be a good trade to the upside. Just to 57K, nothing fancy. Just get 3K up. It's likely gonna go there, revisit, then if it wants to go down, it's probably gonna go down again.
I think it goes back up. Again, I think it's a little nonsense, but I think Bitcoin is going to 100 grand. Why? Just because.
There's I don't know if you have charts over there, but if you have charts, I would tell you to go and check the BTC, because what you're like the thing you're saying now is something I've been mumbling in my head for a while. If you go onto the daily chart of BTC, like a Bitcoin,
Yeah.
if you take a look at the daily chart, you're gonna find a really funny structure to the upside, and it's actually so clean. Like the structure is so clean that it's hard to believe how, like, it feels like everyone's gonna go long, because the daily chart is basically showing the giant cup and handle, right? With the highs of when we made highs in November 21, right, on BTC. Back in there, do you have a Slack access?
Yeah.
I can send you the chart.
Okay. Yeah. If you share it with me,
Slack.
then I can post it.
On
So
the
everybody-
Chase member chat. No, on the Chase member chat, you can access the Chase member chat, right? I'm gonna send the screen there. You can check it there.
Yeah.
It's easy.
Okay. I should see it
So,
pop up here, and then I can
yeah,
jump
on
on.
Slack. Yeah, it's there.
Okay.
Well, the thing is, like, it has the cleanest cap and handle. Like, it's so clean. Like, the highs on November 21, they align with the highs that we've been making, and now it's got the pop to the downside, which it would be to the half of the cup, right? To
Yeah.
consolidate around there, and then just if this is the handle and it bounces here, the moment it clears the highs, right, it's just gonna move another, like you said, 100,000 easy.
Yeah. This is going to be, this will be a little shakeout because you got a lot of people in. Jim, what's his name, talks about it, how average cost for people getting into to BTC ETFs was around 61,000.
Mm-hmm.
And so you're going to have people risking off here just because their cost is higher. And so you're going to have them sell here because it's a liquidity event. They're selling everything.
Mm-hmm.
So I think,
CrowdStrike also went green.
oh, wow.
Do you see the chart I
Some of
sent?
the
Sorry,
tech-
I was not.
Some of the oversold tech are coming back green.
Oh, yeah. No, you know what? I don't see it.
No, it's on Chase member chat.
Let me see if I can find that
Slack.
chat. Can you put it in?
I'm just gonna DM you, Hans.
Yeah, okay.
Hans. There you go. It should be on our private conversation now.
Okay.
You're gonna see it as clear as day.
Oh yeah, here I got it.
I think you see the cup and handle, right? It's super, super obvious.
Okay. Oh yeah.
My friend called Schwab, they are not even picking up the phone.
Oh
Easy.
yeah, I see the
So if
handle
this is the
forming here,
handle, if this is the handle and this is a breakout, right? As usually is in a flaggy way, right? And now it bounces here and it takes the highs. This is gonna go to 100, like 100K, like you said.
Yeah.
It just makes sense.
And I like this here is like pushing on a spring. So a lot of the time when you get a breakout through, like if you do a trend line along the top here, a lot of the time you get a very sharp push down, gets out a lot of weak people, maybe get some shorts in there, and this is pushing on a massive string. So the next strong move has the power to get right through on that handle. So I agree with you. It looks very interesting.
That's why I'm looking at it. Like, I'm usually very bearish on crypto. I still want it to go down, right? But I cannot deny the technicals. They are just showing something interesting, right?
Yeah, no, for sure. It does look interesting. And today's going to help. Today, it feels awful, but I think today's going to help fuel the next run up. I think so. Ethereum's really come crashing down as well.
Yeah, there's the crypto sector in general is kind of suffering, right? And I wouldn't be like, and it's this is funny because I used to be like this kind of like nerd on the crypto space. I used to hate BTC, blah blah blah. But like money's
Yeah.
money, right? And money decides what's valuable and what's not me or my knowledge
Yeah,
on the crypto space.
that's right.
And I'll tell you, Ethereum looks worse, way worse than Bitcoin. If Bitcoin could go to 100K and Ethereum could dip down like all the way to 1K, like I
Yeah.
would not be surprised. It just doesn't look good compared to BTC. BTC looks fantastic, right? Everything it's been doing, the chart looks amazing. The consolidation points, where they've been distributing, how they've been distributing. Ethereum just looks terrible. Like everything is
Yeah.
wrong about it. So I'm not so sure anymore.
I like the utility case on it, but yeah, I think it's all just a bit of nonsense. So you might as well go with the main one, right? You might as well trade the
Yeah,
main one.
yeah.
But I do like I like the utility of Ethereum. Like I think it has like some usefulness that is more that is
I would.
easier to kind of grasp, whereas
Yeah.
Bitcoin is just kind of a
I,
bunch
I
of
love the crypto space as a whole, right? I love the altcoins. I love the utility of everything. I love how it would be, right? But at the end of the day, I learned that what matters is if it doesn't matter if you like it or not. It matters if the people with money like it or not. If they
right.
don't, what can I say? It is what it
Yeah.
is.
Um,
Well, go ahead.
even though financial JPM is recovering, I don't like it. It's hanging in the middle. I don't think we are done. I don't
Yeah.
think we are done with the sell-off.
Yeah. I don't think so either. You've got that was a nice, oh, that was a beautiful pullback on JPM though. It does, it does look okay from the standpoint of if you don't think the world is ending, it's, it's the quality. I mean, Goldman and JPM, look, you've got this nice line here.
Gapping below the 100-day, and you know, it should
Yeah.
create some more. It's hanging in the middle. There's no support here.
Yeah.
It is June low, but still, why can't it go to 180, 170 to test the April low?
Yeah.
You're talking
That
about plumbing issues. Financials are the one that should get hit the most.
that's true. And that April low is right at the 200 day, right there at the 200 for now, anyway. So around 180 could be an interesting spot. I mean, it's had a hell of a run since that regional banking crisis. My goodness. But you're right. Like, but in terms of having something to hang your hat on, you know, I don't think the economy hits the pooper. So I think, I kind of I don't mind the banks. They're going to benefit from lower rates in many ways. I think we recover from this mess, and they've got some good torque there. But yeah, 180 would be great. But I don't know. It'd be interesting to know what Samantha thinks about.
Nelson, your Sherwin-Williams is still holding. It is still above the 21-day.
It's absolutely crazy. What is this thing is doing? But the thing is, like, I already played it out, right? I already cashed out. So the idea was to actually break out. Like this cap on handle should have broken out. I don't like the fact that it's rejecting here.
Which one is that, Nell?
SHW Sherwin-Williams. It has,
Oh,
the BTC cap on handle that I showed you. I look for that in a lot of tickers lately because I've realized that there's a lot of tickers that are forming this kind of cap on handle and they're playing out one after
yeah.
the other. So on the huddles, we kind of look for this stuff. And if you put the daily on Sherwin-Williams, we played the cap and handle break all the way up, right after the handle to the upside, and we
Yeah.
just recently cashed out like 3 days ago, 4 days ago.
Oh yeah. This is nice too. For anyone still watching this, if you do, I think it's free on stock charts, you can actually get seasonal. So really cool. You can kind of type in, here's your SMH or semiconductors, and you can see August, September for the last 5 years. It'll only give you, if you want to move to the previous 5 years, you can. So you can go all the way back in 5-year increments, all the way to 98 to 2002. Oh dear, look at that. September was a horrific month between 98 and 2002, I guess, during the dot-com bust. But August, September are not good months for the semiconductors. Now, does this matter anymore? Maybe we've brought all this suffering forward. I don't know. But those tend to be not great. But the cool thing about this is you can type in anything. You can go,
Do you want to see Meta?
yeah, let's see Meta. So here's Meta. Okay, in August, actually good August. And then September is bad for everyone. September, October are kind of terrible.
I'm just thinking because Meta is the only, because of election and advertising, the kind of ads that are going on right now, because the race has become a little bit closer.
Yeah, you're right. That's a good point. It's a good point. They're going to spend like crazy. Yeah, I like that. They're gonna, and I think Meta is going to just keep hoovering everybody's numbers, everyone's ads. I think, they're going to grab everything. Google will be okay, but Meta's very, very good at it. Let's see, XLU. I mean, it's a whole new world today, right? But it's always interesting to look at. September is just terrible. Look at September's awful, even for utilities. Nothing really wins. How about real estate?
So
September
till
awful.
options expiration, I don't think we're going to have any bottom. We're going to keep,
Yeah.
we are in negative gamma. We have options expiration. So till August 16th, nothing happens. And
I'll
then we have
post-
Jackson Hole. And then we have Jackson Hole in August 22nd to 24th. Maybe that's the time something happens. So we may have pulled forward the September crash in August.
Yeah.
That's
Yeah.
a possibility. You remember 2015, we had that kind of a thing because of China. We had that August swoon down.
Oh, yeah.
So what did that do to September? Did we have a pullback in September? I don't think so, right?
Let's take a look. So if we go, well, it's hard to tell, but
I'll go to the monthly chart and 2015 August, right? And then, okay, September was an inside month. And then October we rallied. So we may not fall further from the August lows, whatever we have, but we may not go up.
yeah. Yeah.
So 5,300, 5,400 is the resistance for now, whatever come May till September.
Yeah. No, we've,
Even with this move, we are not oversold in RSI. We are not oversold in MACD. Nothing is turning. Everything is still fine.
yeah, let's see here. Yeah, we're just touching, the SPY is just touching the 30 on the RSI.
The RSI is not oversold.
Yeah. It's nothing extreme yet. So maybe, maybe we have to hit that 500, that 200-day, which is also the low from April. And that's it. And then we go,
Undercut 500, get to that 490, there is a gap there to fill at 505. There is a gap there to fill.
Yeah.
But there is
Right.
another one over here where we gapped up. Yeah, 499.87 is that gap that we can fill.
Yeah.
Yeah, but
Yeah.
trying to buy puts right now, it's only put spreads. If you want to buy puts, it's put spreads.
That's right. Yeah, everything's very, very expensive. But I think one more down day, and I think I'm going to be looking to put on some sort of short volatility trade. But I need to see things just kind of relax a little bit more. And I want the futures to really help me. Oh, see that? The front 2 months are actually a little bit steeper. The whole thing is still not great, but I almost want to see this front month a little bit higher, a little bit more panicky for it to be over. But again, we're kind of seeing what we saw Friday, which was the VIX filling in because people are monetizing hedges and it's, you know, some retail trying to look for income opportunities. And then the smart money, so to speak, is just kind of waiting. It's not convinced that this is done. It's not convinced at all.
The USD JPY is still not having any bounce, but Australian JPY is having a bounce though.
Right. Yeah, maybe you need somebody to come out and say, we're on it, we're taking care of the situation, or maybe we need to find out that uncertainty is always what markets don't like. So if we don't know the reason things are selling off so much, maybe it's the carry a bit, maybe it's jobs, maybe it's the economy. I don't know. The jury's out on those things. But as soon as we know something, then we're going to see a collapse in VIX, even if it isn't very good news. Then everyone can say, "Oh, okay, I get it. That's what happened there. Oh, I like Meta at that valuation." So people will all people need is a little bit more visibility. Like, okay, this Thursday is going to be big, right? That upside will be big. So I can't remember what earnings we've got this week.
Oh, we have a lot. But we have all the software names that are second tier, like Palantir, HubSpot. We have
Yeah.
Uber. This week we have a lot of earnings actually. But I'm like,
Yeah.
if Meta can't hold up its earnings, if Amazon can't hold up on earnings, are you going to attempt to go long any of those names? I don't think so.
No, I mean, yeah, where's the
We have Caterpillar tomorrow morning before open.
yeah. Let's see here. Where's my earnings chart? Yeah, I think Palantir's today.
Palantir is after close today.
Yeah. Well, it's going to be interesting, guys. I mean, it's all about the close today. I don't think it's going to be the greatest close because we're not sure about the war, Iran-Israel. We're not sure about what exactly happened to dislocate volatility like that. So unless we get some sort of news, it could still be a GME type situation where you walk in and the VIX is at 55 again tomorrow.
Yeah, that's easily possible. Easily possible.
Yeah.
The only thing that is telling me, because everybody pays attention more to the regular, VIX term structure. But since 0DT has come in, I have started watching the VIX 1D.
Oh,
Okay. And so on Friday, the VIX was not as high as the VIX 1D. The VIX 1D was already saying the kind of hedging that was happening for Monday.
yeah.
For today, because it's 1D. Why do you need to go 30-day out when you can hedge or buy puts for a 1DTE, right?
Right.
Tomorrow you can hedge with tomorrow's options. Why do you need to go 30-day out anymore? So
Yeah.
today, the VIX 1D is actually, the high was 45 and now it's at 32. So maybe, at least, both the VIX since morning has been coming down and the VIX 1D has been coming down. Friday, it
Yeah.
was totally opposite. VIX 1D kept going higher, whereas um, we didn't have that kind of a scenario with VIX actually. There was divergence.
Yeah. Yeah. China's hanging in there. That's interesting. People are probably flocking to Chinese treasuries as well, or Chinese bonds. What's our TLT? Maybe we need, let's see here. TLT off the highs, but still, I would maybe want TLT to kind of like relax a little bit. Maybe we need that 10-year to just kind of like stabilize a bit too for markets to stabilize. Hmm. All right, guys. Well,
My CMG is already up 25 bucks.
boom. There you go. You can hide in burritos. I love it. Hide in burritos.
I can tell my son, you can have one burrito. I made that much money.
That's right. One burrito. Did you make enough for an extra one for you?
25 bucks. Yeah, both of us can have one burrito each.
There you go. There you go. Disney down, McDonald's down a little bit. Lulu down, of course. It's always down. Yeah, I don't know. We'll see. We've definitely, there's definitely been some fear here. There's no question. I mean, do we get a lot worse? Yeah, I don't think a lot worse, but can we revisit? Sure. Uh, and I think that 500 is the line in the sand. Until we start getting news that AI is a big bust and then that's probably a problem for tech. But until then, the QQQ is at 436. Wow. I think it was 425 this morning.
423.
423. So it's had a nice little bounce here. Some of them are kind of relaxing a little bit. Micron, TSM is actually kind of hanging in there. Yeah, they've all had really nice bounces.
This may be just the first bounce on 200-day, right? It has to actually, right?
Yeah.
It went below the 200-day QQQ, came back up. Now it's just about to touch the Bollinger Band, but it's still not oversold. So we could again come back down.
Yeah.
We easily could come back down. This is not done by any chance.
Yeah. No, I agree. I agree. Amazon only down 5. Oh, Amazon's down to its lows from Friday. Well, certainly hanging in there. Nvidia's 100. It was there last week. So it's okay. I mean, I don't think anyone's going to want to be short Nvidia into earnings. I think everybody's going to figure that the numbers are good. What I'm wondering is that the last time they're going to be good? Is the question. Tesla's bounced.
But okay, even if that is the case, don't you think the people that have been spending so much on CapEx, they are going to fall more than Nvidia? Like Microsoft and they keep talking about spending more, spending more.
Yeah, I think Microsoft is definitely at risk. I think something like Meta isn't, because I think they can immediately say, okay, we're going to slow down on spending, but we're going to start monetizing. We're going to keep working on monetizing it. Whereas, you know, Dell and Nvidia need sales. They need the AI bubble to remain intact. I think there are lots of companies out there that can use whatever they've bought and say, okay, that's enough for now. Just like Meta in 2022, that's enough for now. Let's just, let's wait and see and make the most of what we've got. Somebody like Meta can really make some dough. Their whole pinpointed ad targeting, like, I don't know how you use AI to get even better at that. They just seem like, it seems like that's about as well as they can do. Like, what else are they going to do? Zap me in the brain when I walk by a store and implore me to buy something. Like, I don't know how much better it can get, but I think those are the companies that can really put this stuff to use. But for the picks and shovels makers have really benefited from all this because they don't care if nobody makes money with it, but they will care eventually if people realize they may not be making as much money with it. That's when the picks and shovels can really suffer. So I wouldn't be surprised if Nvidia gets back to 120. Nothing would surprise me, but I don't know about making new highs. I don't think.
We have so many oversold plays actually going green.
Yeah, look at that. Tesla's $20 off its low. VIX at 37.
Yeah, I mean, how much more can you sell Solar Edge, right? It went from 388 to 25. How much more
Yeah.
are we going to sell that off, right? So some of them are already so oversold that you can't sell them anymore. That's where they are at.
Yeah.
So
Interesting. Visa, MasterCard, I think you can dip into those. I love these cash rich companies, incredible brands and moats. Like, I think those are interesting. Like, I don't know about small caps, but I like some of these broadening plays.
and defensives like LMT, if things are going to keep going like this,
Yeah.
but it is down today. That's maybe peak defense, probably.
Yeah.
If LMT is down, we don't have any Iran, Israel, probably.
Right. Okay, guys, I gotta run. My wife's asking me to do something, so I better run. But it was fun, and we'll begin tomorrow. So
Yeah, I'll be there maybe 15, 20 minutes late after 9 a.m., but I'll be there.
okay, sounds good. Have an awesome day, everyone. Okay, bye-bye.
Yeah, thank you. Bye-bye.
Bye bye. Thank you.
Thanks, Nella. Bye.